Okay, now we are sort of diving in a little bit more deeply into the individual financial statements. So, in the previous lecture, we discussed how they're related, but now let's kind of back up and think about what these financial statements are made of and how to properly record the values in your different accounts in the right order so that you can make sense out of them, so that you can make financial decisions. So here I have a balance sheet. And a balance sheet, as you recall, tells you how much you own as a company and how you paid for it, basically. So it's your assets, what you own, and then your liabilities, which are what you owe, money that you need to pay back, and then the equity, the money that you have generated as the owner of the company through retaining earnings as a company, as well as any contributed capital that might be there. So balance sheets consist of 5 main sections. There is a cash account, which holds cash and its equivalents. And then the working capital accounts, which are short-term assets and liabilities. So here we have short-term investments, accounts receivable, inventories, other current assets. So those are your working capital assets, current assets. And on the liabilities side, you also have current liabilities, which are those debts that are coming due within a year. So accounts payable, the money that you owe to your supplier. Short-term debts, if you have like a credit card or a line of credit. Other current liabilities, right? So your working capital is defined as current assets minus current liabilities. And we're going to be looking at working capital a lot later in this unit. Okay, after the current assets and current liabilities, you have your longer term assets or your fixed assets, and those are reported as your property, plant, and equipment, other long-term assets. Notice that on this balance sheet, they report net property, plant, and equipment, which is the original value of your assets, the original price that you paid for them, minus accumulated depreciation. And we're going to get into calculating that in these examples that we're about to go through right next. You've got your long-term liability accounts over on the liabilities side, and then everything that is not paid for by liabilities, all the assets that are not paid for by liabilities, was earned by owner's equity. So our owner's equity accounts, there's common stock, or contributed capital. These are the value of the investment that owners made in the company. And then there's retained earnings, which is the net income that is generated by the company year over year over year, net of any dividends that are paid out. So retained earnings are the earnings that stay in the company. Dividends or owner's withdrawal are monies that flow out and are recorded in the statement of retained earnings. Okay, so that's what's on a balance sheet. Now, during class time, I have you, we went through and looked at some real life balance sheets, but I'm not going to make a recording of doing that. If you missed that in class, I would urge you to go ahead and do and search Edgar for some example balance sheets so you can see how they compare to these textbook examples. What I want to do now that we've talked about balance sheets for a minute, I want to do the first homework demo, the practice demo problem. So I'm going to exit out of this. Now, if you look in the modules, you see in week 2 here, there's this assignment that's called practice demo, which is what we're about to go through. And then there is a blank Excel sheet, right? So you don't have to create the Excel sheets from scratch. And for heaven's sake, don't do these problems without using Excel, okay? You make your life way too difficult. So open up this file, download it, and open it, and then go into the assignment. And what I would suggest to get into the assignment is if you go in through the MyLab and Mastering menu here, that gives you more real estate to work in MyLab, right? So use the Excel sheet, go into My Lab and take up a whole half of your computer screen, and you'll be much happier. Okay, so I'm going to get mine all situated and be back in a minute. Okay, here we are with this pretty little Excel sheet that I made for you that's all color coordinated and it looks nice. Couldn't quite get that nice shade of teal, but it's pretty good. And this first homework assignment. And so what we need to do is fill in all the blanks from this in this balance sheet here. Okay, so what we got to do is get the data out of here. There it is. If you click on this little icon, it'll copy it. I suggest copying it to a clipboard and not directly in Excel. If you open it in Excel, then it'll open in a whole new worksheet, and you don't want that. We want to get it on a clipboard. Then you got to hit copy, and then go ahead and put it in up here at the top. You'll notice that I didn't start this sheet to fill in until line 15. I'm going to make this a little bigger so that you can see it. Then the other thing that I can do is format these column headers so that they wrap, so you can see what you're looking at. And there it is. Okay, so now we can see what we're doing. Okay, close out of there. So you will notice that here the account names are listed in alphabetical order, but what we have to do is put them in the right order for a balance sheet. And so if you can't remember what that is, you go back to the PowerPoint, find that page that has a balance sheet on it, and then you can kind of look at the order in which the accounts are recorded. From the accounts are recorded in balance sheets from the most liquid, those items that are going to turn into cash quickest, to the least liquid. Okay. So what I suggest in doing these, in sort of doing this work, is what I would suggest is, because over here in Pearson they've got, or in My Lab, they've got these drop down menus. What you should do, and what I always suggest as you're making financial statements, is you fill in the account names first, and then you go back in and get the numbers. And if the numbers balance out on a balance sheet, then you're probably doing it right. Right, so remembering that assets are listed in decreasing order of liquidity, that means that cash is going to go first, and then maybe accounts receivable next, and then inventory. And then our fixed assets, we report that as net property, plant, and equipment. But net property, plant, and equipment has component parts. We start with just the raw value of the property, plant, and equipment, or here they've said plant, property, and equipment. And then we subtract accumulated depreciation, and that gives us net property, plant, and equipment. Okay. So again, because we've got those drop-down menus, we're going to use that to kind of cheat filling in over here. On the liabilities side, current liabilities, the only current liabilities we have are accounts payable. That's money that we owe to suppliers. And then the next item on the liabilities side would be long-term debt, remembering that we present the accounts in decreasing order of liquidity. And then in the owner's equity accounts, there are two accounts that are given common stock first and then retained earnings at the very end. Okay, if you're not certain about that, we could go back over here to the PowerPoint and just verify, yep, common stock and then retained earnings afterwards. Okay, so now we have the account names. We can go ahead and fill them in here. And what I'm going to do is do that really quick. I'm not going to say anything. I'm just going to type. You guys might want to stop the video and just fill it in the way that I've done. Okay, so I just quickly filled that all in. And you'll notice I've used abbreviations. Quite often you do see AR and AP given that way with a slash in between them. Okay, so now what you need to do is use cell references to go get the values, because I'll show you why that's going to make your life easy. Right, so if you go get the cell reference and pick up 2016 cash and accounts receivable and inventory. So our total current assets, we add all those three up, so that's the sum of our current assets. And again, you go up and get the values for property, plant, and equipment. And then our accumulated depreciation is 4234. So the net value of our property, plant, and equipment is going to be this value. We could call that the gross property, plant, and equipment. And then subtract accumulated depreciation. That gives us our net property, plant, and equipment. So our total assets are going to be, in this case, it's going to be our total current assets plus the net property, plant, and equipment. Like that. Now, I did that whole column all the way down. Why? Haha, let me show you why. Look at that, people. So you can just copy it right across. All right. We still don't know whether it's right or not. Let's see. Okay, again, grab that accounts payable. So our total current liabilities is just that accounts payable, right? Long-term debt is there. So our total liabilities is our total current liabilities plus our long-term debt. Then we have our equity accounts. Pick up the stock from 2016. Pick up the retained earnings from 2016. And the two of those together constitute our total owner's equity. And then you cross your fingers and hope that your balance sheet balances. I always get so nervous. Yep, it balances. So this number is the same as this number. So we've done it right, we think, so we can go ahead and copy those values across, or copy those cell references across in calculations. And it should give us what we need. And yeah, and then you just go ahead and transfer all those numbers into the MyLab, which I'm not going to do because you don't need to sit here and watch me do data entry. I will. So you can go ahead and do the data entry into MyLab, and then what we need to do is list all the working capital accounts. So working capital accounts, again, they are current assets and current liabilities. Okay, so our net working capital for 2016, working capital is current assets minus current liabilities. Okay, so our net working capital for 2016 is our total current assets minus our total current liabilities, not our total liabilities. Just because they're right across from each other doesn't mean you subtract one from another. You got to go look in the table to see what you need, right? So it's our current assets minus our current liabilities. So that's in 2016, 5817. In 2017, I'm going to scroll up a little bit so it's in the middle of the page. In 2017, again, it's our current assets minus our current liabilities. And so the change in working capital, when we're doing changes, or when we're looking at changes, and when we go to do percentage changes in this class, the change is you subtract the old from the new. So it's new minus old. Okay. So 7090 minus 5817. So our change in net working capital should be 1273. Now what I'm going to do is I'm going to stop the video, then I'm going to do all my data entry, and then I'm going to start it back up again and just to verify that this is right. Okay, so there it is. In an earth-shattering move. We got it right. So that's how you do the first practice demo. Okay, so you guys go ahead and do that, and we'll move on to the next one. Enjoy.